You muted there. Fantastic. So welcome everybody, and thank you for joining us today. I think a very important topic that is probably on all our minds quite often, particularly when we are in any discussions with our clients, but certainly a tough one. So what we want to talk to you today about is really the risk management solutions around commercial crime. And, you know, I think we live in a time of heightened criminal activity at all levels of society, whether pure sinister intent or, you know, people's desperation. We certainly are seeing the economic burden coming out for victims. And I don't think that any industry is really immune to this at all. We're seeing it across the board. More specifically, the type of industries we're seeing commonly impacted by these kinds of losses and significant losses are around the telecoms industries, manufacturing, professional services, transport and warehousing, and particularly wholesale trade as well. And I suppose that the challenge for it is, as always, is that all of them fall foul to asset misappropriation, accounting fraud, bribery and corruption, and on the increase is in fact customer fraud. The majority of fraud-related crimes are committed by internal staff who are trusted with responsibility to run and care for the organization. So it's particularly difficult. Traditionally, businesses are in the habit of insuring for risk, a large majority relying solely on that mechanism of risk transfer, and infrequently considering the route of actual risk management through fraud detection and proper prevention programs. I think most concerning for me is the fact that after we have had an incident, only about 42% of particularly clients who have been impacted take any further steps to investigate. 59% of the incidents were not brought to the attention of the board of directors. 66% of the incidents were not reported to regulators or law enforcement. And an alarming 72% of the incidents were not disclosed to the auditors. So only about 55% of the South African respondents on average have put in place formal controls over anti-fraud programs. Where such risks persist and claims experience is rife, of course, insurers are left with no alternative but to address this within the policy conditions, capacity management, and increased premiums. And as we have seen over the last 3 years, the majority of our competitors retracted from the market altogether. Liability claims and more specifically criminal matters require prosecution and so can become particularly long-tailed in reaching resolution. i2 Commercial Crime took the stance that we would continue to provide you and your clients with a solution in this space, and did so by applying stricter corrections and remedies to the book, allowing us to become the market leader in this class by way of policy count, GWP, and market share. i2 has always been consistent and present in this difficult line and have led the way in rectifying the crime market through our underwriting approach. So much so that recently we have seen a handful of market players actually resurfacing in the space and willing to participate on the commercial crime lines. However, we continue to see a hardening of this market, in particular because of the increased notifications and some large losses, both locally and internationally. And this is why now, more than ever, it is vital that a conservative and most importantly, sustained approach be taken. This is one class of business where growth for growth's sake is not prudent, not for an insurer nor a client. And really undercutting the market at this stage could be catastrophic. But naturally, the additional capacity in this area is always welcomed. It therefore only makes sense for us to continue our journey to provide clients with solution in this area, leveraging from our experience and expertise in the space. And i2 now looks to continue on the risk management journey started in the underwriting and now look at taking really risk management to the client's doorstep. i2 now provide commercial crime assessments and consultations for clients. Our consultants will attend the client's premises and engage with the various areas of the client's business to understand the client's operations and controls in place, followed by thorough assessment of the client's environment and identification of any potential weaknesses, which are then shared with both you, the broker, as well as the client, with a view to providing some preemptive action for these risks to prevent commercial crimes and mitigate the consequential impacts that these have on your business. We believe in supporting our clients' growth and contribution to our economy by providing this vital service and solution at no additional cost to the client. We want to ensure that we grow together. Today, I've asked Michael Barker from Crime Risk Advisory to join us and talk to you a little bit about the process we go through when we engage with your clients, the areas he looks at, and ultimately how we can help. We encourage you to please leave your questions in the chat or raise your hand as we go along and ask any questions that you may have as we go through this discussion. Michael Barker has been investigating commercial crime-related matters for the last 25 years. He has managed teams of investigators and led specialists in all forms of commercial crime matters, from white-collar fraud to Ponzi schemes and organized crime operations. Michael Barker is regularly asked to talk as a keynote speaker on commercial crime in South Africa, and has been published in Business Day on numerous occasions, and is accepted as an expert witness and consultant. So we're going to be joined now as I stop sharing my screen and I hand over to Michael to talk to you a little bit more today about commercial crime processes and the assessment process.
Good morning, welcome. To give you some context, I've been investigating commercial crime matters, as you heard from Megan, for 25 years, and it's become quite apparent that insurance for businesses has become more expensive and in some cases absolutely impossible. And this is due to the acceleration of commercial crime losses in South Africa and in Africa for that matter. With that in mind, I set up a business called Crime Risk Advisory, and the business has taken the form of a risk management consultancy. It does not handle investigations for clients. It specifically goes into businesses and addresses the areas of concern that we find. Obviously, from years of experience, and I'm going to go through some of those trends with you in a minute, we've now noticed the areas where businesses are most likely going to be hit. The normal assessment that we've been asked to do would be a renewal or a new client for an insurer. I too, in particular, have taken a great stance in supporting this solution going forward, and they've committed to paying for their clients to receive this risk management service that we are going to be providing. Thanks, Rob. I can see your question already. It's a bit early for that one. To give you an idea of the trends. So when we go and do a risk assessment, this is done with permission of the broker and the insured. And the idea behind it is to find out the weaknesses within the business. And we will look at all aspects of the business. And you must understand that a mining business or logistics business or a financial business are going to have different risks. So when we look at a financial business, we'll be looking at the controls surrounding payments. These days, most companies have two-tier systems with regards to releasing, and they're on the ball in various areas. But there's always areas that they are just complacent about. And, you know, often companies think because they've got commercial crime insurance, they don't have to go that extra mile. And it's just not practical anymore. I mean, you've got to think out the box, and you've got to look at all spheres of a business. Just to give you an idea, I mean, financial services is one issue, logistics is another issue, mining. So if we're looking at any one of those particular businesses, our approach is totally different when we go into these companies. We don't have one interview with one person. We assess what's necessary. So for example, if I'm looking at a logistics business, I will assess where those risks are. And they're most likely going to be in a stock holding environment. It could be in a releasing environment, physical security environment, could be in sales, but I'm going to assess that. And then I'm going to arrange with the company to interview staff specific to those areas of that business. Could be the transport operators, that could be a risk within that business, but we kind of know where to look and we know where to go to immediately. As I said, finance businesses, we're always going to look at payments, we're going to look at debtors, we're going to look at cash, and one of the new trends is travel expenses. We're seeing more and more fraud with travel expenses, and it'll boggle your mind quite how much fraud can be raised by a PA sitting in an office in charge of booking flights for the staff. And we've seen this in some big engineering companies where there's so much travel for these engineers, and there's no one really reconciling this travel. And I'll be quite frank, it's one of the biggest areas that we now look at and address when we go into any business. So that's just a finance area. I mean, debtors, there's always rolling of debtors. And I don't want to go too much into the obvious things. But the point I'm trying to make is when we go into a business and we're looking at the financial institution, we know where to look, we know where to go, we know the questions to ask. And then we try to find a solution with that business to the areas that they may not be addressing correctly. That solution is discussed with the client, and with their agreement, it's put forward to the insurer. And I think that's important to understand. This is a partnership. It's a case of going in there, assisting them, finding the weaknesses in that business, and then giving them solutions that are cost effective, that make sense for that business. Otherwise, it's just a waste of time. You can't go in there and say, listen, you need an internal audit department when, in fact, they've costed that and it's just too expensive. Part of the problem with internal audits, so excuse me, guys, I'm thirsty. Part of the problem with internal audit departments is that the staff are so expensive and they're getting stolen between companies left, right, and center. It's very, very difficult to keep internal audit and a good internal audit team employed within a company. So there's other approaches, there's other solutions. You don't have to have an internal audit department. Just jumping around a bit, I've noticed that a lot of companies don't even have a risk committee, that's crazy. I mean, you've got to start realizing that you need one. So you've got a proposal form that an insurer may accept from a company, and it'll have all sorts of questions on it. And, people tick the boxes and they say yes to certain things and no to certain things. But ultimately, at the end of the day, when you're sitting in front of the company, you start seeing those little cracks and you start seeing the attitude. Now, if a company really wants you in there and they want the risk management exercise, the attitude of that company is great. And they're easy to work with. They open up every door and they own the problem. And those are the people that insurers want at the end of the day, not the ones who are going to say, this is a problem, I don't want it, that sulky sort of attitude. Procurement is another area we always look at. If you're going to a business, let's say financial business doesn't necessarily have a procurement department, but a logistics business or a mining operation will have a procurement department. So we'll go in there and we'll be asking the questions about how they manage the procurement staff. I'll give an example. I mean, are they paid enough? Are they not paid enough? I found numerous instances where staff are just underpaid in procurement. Procurement and corruption is one of our biggest issues that we're dealing with at the moment. So, procurement is always going to be a factor, and lifestyle audits are going to become a norm. I can tell you that now. Certainly from not necessarily for blue collar workers, but on more senior working level, we are going to be seeing more lifestyle audits occurring, and that's just a fact. People are living beyond their means, and it's still amazing. I still see commercial crime matters today where you say to somebody, but didn't you notice that person bought a Porsche? And they go, no, because I always drove the VW Polo to the office. But I said, but why are they going skiing all the time? I mean, she's a part-time sweeper, this sort of thing. I mean, it's absolutely madness. Where there's an opportunity, unfortunately, in South Africa and Africa, people are going to find ways to get through this. Stock and warehousing. Guys, this is often a major, major issue. In fact, I've just looked at one company now, which is actually quite fascinating because the company has a massive stock holding, huge stock holding, and they're very sales driven. But one thing I did find was the stock was impeccably managed, but their problems sat in the other areas. The problems in that business sat in debtors, sat in sales. Sales is a big attraction because what happens is people are paid on commission in sales, and the sales staff become too familiar with the customers, and then there's all sorts of issues. So in that instance, it wasn't that massive warehouse that was the concern for me after having looked at the business. It was things like, and I repeat myself, debtors, the financial payments, the reconciliation of accounts, credit cards, travel expenses, all these other issues. Consumables is another big one that's now coming to the fore. as being another big trend, is that, there's not enough reconciliation of consumables. I mean, we had a matter not that long ago, which was over R1 million loss just on coffee and tea and basics in a business. And I mean, it's amazing how that just gets, people just forget all about it. It's a very simple thing. Mining is a completely different. Now, obviously, that, the way we assess a business is we go in there and we determine where all the staff work, where the blue collar staff work, where the financial staff work, where all the different divisions sit. We then interview staff in the crucial areas of that business, and then look at those controls and then make suggestions as we go, as to things that they can improve. But in mining, we do find that there tends to be a scenario where you've got a head office often, which are great, and they've got superb skills in that head office. And when you interview the head office staff, you're quite amazed and you're impressed with them. They're always on time for the meetings. They've got all the answers. But then you go to the actual mine and you start asking the real nitty-gritty questions, and they don't align with what the head office is saying. So mining is quite a tricky one. And there's lots of other examples other than mining. But what I'm saying is mining is a much more difficult risk management exercise to complete, So there's a question there. Yes. So, Charles, thank you very much for that question. It's something I should have made clear. Is what I try and do when we do these risk management consultations is to get to a point where I'm getting feedback to the company in every single area that I've spoken to them about. And I've said, look, this is what you can do to fix these areas. This is the problem. I don't get them arguing with me. They agree with me and they're saying, yes, Michael, that is a problem. And we agree a way to fix it. Insurers then, and they'll explain that to you, when I'm nearing the end as to how they treat that information, but it's very, very positive. And this is the way to drive premiums in the right direction, and to let insurers get involved in this risk management space, because it's just not working. The commercial crime industry isn't working. And in 5 years, if we carry on like this, it's going to be uninsurable. That's the bottom line. So you've got to do these types of things. And there's no cost to the company. So it's madness to ignore that. Just to give you a few other things, I mean, physical security, just, you've got to use as a business, and I'm giving you just trends and some examples of what we're looking at. Physical security, you can't use these fly-by-night security companies. You just can't use them. They don't have security officers liability insurance. And we're finding on many occasions that security officers are involved in theft in businesses. And that's a major issue. So when you're underwriting a risk, that's got to be something that's said. And as I'm doing more and more and more of these consultations with clients, they're not even aware, that security company should have that cover. And it opens their eyes to it. And if no one's telling them and helping them with these things, it's going to remain an issue. It's going to just carry on. So it is vital that. Just an interesting thing on the physical security side. Another trend we're seeing is with the cost of fuel. Diesel theft in businesses is just phenomenal. And there are lots and lots of businesses with their own pumps, and even the ones without their own pumps that have got their petrol cards and, run off different whatever. It's actually become an issue. It's a major issue, and that's something that now has to be considered when you're looking at on any risk. Is there a diesel risk? I mentioned that to a customer the other day, and he was telling me about how they're using their generator for load shedding. And he says they didn't even think to consider looking at how much diesel they're looking at. And this is a huge company. I mean, they're spending $1 million a month. So I'm not suggesting there was fraud in that company. I'm just saying you need to be aware that this is now a whole new area of risk. Human resources, guys, it's always going to be a risky area. It's what you can and can't do in terms of checks these days with POPI. But, you can normally do the criminal checks. You can do the background financial checks. And these need to be done. They need to be done religiously in people working in those areas. I'm not talking about general blue-collar workers, although many companies these days are doing criminal record checks on blue-collar workers, and it's become mandatory. So, if you want to improve your risk, do the checks. If you don't want to and you want to work against it, don't do them. I know there's financial aspects to these things, but you've got to weigh up the risks to the financial solution to the problem. Cyber is becoming a huge issue. you know, I need to basically, sorry, Megan,
So,
I think Megan wants to just add a question.
I'm just going to interrupt while
Sure.
we're on talking about HR controls.
Sure.
Mike, what are you seeing? Because we often will ask around leave policies, and I think it's important for people to understand why we're asking. We're not worried. I mean, obviously for mental health and everything else that people are getting their rest. But from a control and assess a risk management perspective, what is the importance of the leave policy within an organization and how can it help?
Okay, so historically, the leave policy's been there because, and I'm just going to give you a bit of background. The leave policy's there because companies were picking up that there was staff fraud. And the best way to pick this up is if somebody's on leave and they're not there, they're not doing the job, and somebody takes over their job and they do it for a week or two. They then pick up that, hang on, there's been a payment to another bank account or something. It hasn't changed. We're still seeing the same trend. The bottom line is you need to enforce leave for at least 2 weeks a year. That's my view. The problem is it's got to a point now where you need to make sure that that staff member can't sit at home or on holiday and still work online. So they need to be removed from the system for the full 2-week period. I know it's easier said than done and people cheat, but the reality of it is it needs to happen. I'm not kidding when I say we're still seeing all the time. That's how people get caught. So they're not there, they're not paying attention. Somebody phones a different person about something and the alarm bells ring. So Megan, does that help? Does it answer the question?
Thank you.
Sure. Guys, IT, obviously IT has become a big issue and cyber risks are a big issue. So obviously we want to be asking the basic questions at least about passwords. Do you have firewalls? Do you do training? Do you train your staff as to phishing risks and that type of thing? You know, you need to control your sales staff, and that's where a lot of this stuff kicks in. So you do need to worry about cyber, and you need to pay attention to what insurers and other risk managers are telling you about cyber. You know, there's a reason for it. And I think most companies are becoming more aware of it, but it's still early days. I think complacency is the biggest issue that we deal with. Companies honestly believe that they're doing the maximum that they can to fix, but they just don't. I mean, that company I was in the other day, I was telling you about, with a big warehouse full of stock. They didn't have, well, they told me, I said, do you have a risk committee? And I know I mentioned this earlier, but I said, do you have a risk committee? And they said to me, yes. And I said, well, okay, so who sits on the risk committee? And the guy I was talking to was an FD. He said, well, I'm on it. And then he mentioned 2 of his other colleagues in his office. And I said, well, that's not a risk committee. No, risk committee is when you involve management from around the business that matter in specific departments, and you're all involved in the solutions within a business. And you need to be more aware of what your risks are. You can't just blatantly carry on running a business, selling and not paying attention to your warehousing in the background, your stock holding. I mean, stock holding in this particular environment was, as I said, was well handled. But at the end of the day, with stock, and I'm jumping onto stock now for a second, you know, you've got to have people counting your stock periodically that are not working with the stock every single day. Otherwise, it's madness. So if you know, a lot of people say to me, oh, we've got this cycle counting team. So every day, you know, the cycle counting team are counting and counting and counting, but they're the same guys doing that. And we find when we go and when there's a loss, we go in and find there's nothing in the boxes that they're counting because they're fully in charge of that stock. And sorry, I just wanted to ask Giselle, I think she's got a question and I'd like to hear it.
Yes, please, Mike. Thank you. I'm not turning on my speaker, so I'm hoping you can all hear me through the other computer. But I mean, Mike touched on an internal risk committee and audit committee. And I think, Mike, it goes down to that very small, very important question on the proposal form around segregation of duties. And maybe you can just reiterate the importance of segregation of duties within a business, like you said, so that the FD is not looking at everything and you actually have 2 or 3 people in a process signing things off.
It's a very good question, and I'll give you an example. And we've seen it in debtors and in HR specifically. And I'll talk about debtors. So debtors is a shitty job. Excuse my language. Nobody wants to do debtors. So what you do is you often find somebody gets stuck in that role within a business. And, you know, you've got Joe Bloggs running the debtors department with a few clerks. And I'll be frank, we've seen so many frauds where there's been a rolling of debtors because that person is left alone in an office. Nobody wants responsibility of doing debtors, and financial managers gloss over those reconciliations and take that managers recons at their word. No one drills down into it and looks at it. So one of the things we recommend is, especially in any business, is that there is some type of internal audit process, even if it's their own staff looking at the reconciliations behind debtors. And you've got to have segregation. If you don't have segregation, you have the same problem. We've also seen it in HR, where you've got one specific manager working with a small team, and the amount of control that person has over payroll. We've seen ghost employee issues, and segregation of duties in a warehousing environment is absolutely vital. You can't have the same person picking something from a warehousing stack and dispatching the thing at the same time. You've got to have various checks and balances in place. And insurers, they require that, they need that, because at the end of the day, you're insured for commercial crime, sure, but this is about collusion. Where there's collusion, it's very, very difficult to risk manage, but you can try, you can do what you can. So you can't just ignore segregation where you think it suits you. You've got to be thinking, how do we segregate every aspect of it? It's the same thing in a financial environment. You shouldn't be having creditors clerks only working in creditors. You should actually be rotating those staff. So you should have some staff, and I know the excuse is going to be, but the debtors clerks know the debtors. Well, that's not good enough. You've got to have creditors clerks moving through debtors, moving people around those areas. That's your better risk. That's how you get the job done better, more effectively, and you have more comfort in terms of managing that commercial crime loss. Sorry, Megan, yes.
Have you noticed any particular trend between larger entities and smaller entities, from not only an occurrence base, but particularly from the resources and things available? Is a big firm more inclined to have these kinds of risks within their business, more so than a smaller one, or are you seeing it across both?
So I'm seeing it all over the place. And the difficulty is with smaller businesses, you tend to find owners of businesses are more trusting of the staff because they've got less staff members. So they've got 20 staff members, they've got one person making payments. And a lot of those people don't have the cover, and they literally lose their shirts. I know people who've lost businesses because of this. And there's just too much trust. And, it's one of those great excuses you always hear from people when they've been taken. But I trusted that person so much. And there's no segregation, as Giselle mentioned, in those circumstances. And it's very, very disappointing. And as the businesses get larger, sure, you get more segregation and you get more control, but that issue still remains. Obviously, we mainly deal with the really, really big losses and, bigger companies. So we see those trends. The smaller businesses, we don't do a lot of those smaller losses. But certainly it's a massive risk, and they do need a small policy. There's no doubt about it. Nobody can not have commercial crime cover, and I'm not an insurance salesman. I can tell you that for free.
Mike,
Yes,
we
Giselle.
have a question from the pop box from an anonymous attendee.
Yes.
They said that when it comes to commercial crime, there are relevant pieces of legislation that need to be complied with in terms of reporting an incident. Small to medium organizations may not have a dedicated compliance team and are unaware of their reporting obligations. Have you come across these, and how do these smaller organizations ensure that they are compliant?
So it's actually a very, very good question. And I've seen it both from a small and a big business environment, because most people, if you don't work in an industry, you're not expected to know everything about it. I'll be quite frank. The legislated answer to that is anything over 100,000 Rand in terms of commercial crime loss or any theft or related crime must be reported to the police. Where the Act doesn't go far enough is it doesn't stipulate by when. But the general rule is you must report it. You must report anything over 100,000 Rand to your local police station, who will then decide what to do with it. In what manner you report it is up to you, but you need to be, at your local police station reporting it. I've had the same question from large listed companies who don't know the answer to that, but that is the answer. And once again, I say to you, as a small business, you can't be expected to know that. So, you know, you do need to take it seriously, but let's also be realistic with the problem. Does that answer the question, Giselle?
It does, thank you.
Okay.
Mark, maybe I can ask a follow-on from there is, talk to us a bit about when these incidents are investigated. Sort of what is the process? Because unlike a normal liability type of claim,
Yes.
where it's commercial related, the police aren't necessarily involved.
Yeah.
You're now, you know, sitting in the investigation stage, having to also coordinate with police because there would be criminal investigation as well. What is the process when you actually go through investigating?
So it's quite an interesting situation. So if you're an average business out there and you've had a loss of, let's say, 500,000 Rand, and you go and you report it to the police and you give them the basic information, the duty of the police is to investigate that. But unfortunately, it's just not happening. And there's multiple reasons for it, but a lot of it's got to do with skills, lack of vehicles. They could come up with hundreds of reasons for you, but those cases often don't go anywhere. They just don't. They'll sit there. The only way to get anything done is to do it for the police. And historically, what we've done is we've always investigated these matters from the ground up. And what you're doing there is you might get a call from a company and say, look, you know, we've picked up there's a loss. What we would then do is go in there, obviously do an investigation, a thorough investigation, and then take affidavits in support of the case. Now, those affidavits are crucial, and there's certain ways that these things need to be done and certain standards that the police require. And often we try and work with them and grow these cases as we go. And I just repeat, to rely on them, unfortunately, is not working. Some of the bigger cases, we've had some good people at the Commercial Crimes Unit and a few good people from the Hawks. But on the run-of-the-mill stuff, it's very difficult to get it prosecuted unless you as a business owner drive it and you help by obtaining all the documentation and the attachments for the police and doing everything. The police, by the National Prosecuting Authority, will then, only when the docket is finished, bank accounts have been subpoenaed and obtained, only at that time will they effect an arrest. They're not going to arrest anybody prior to that. And they're very careful about that these days. So they don't want multiple postponements in commercial crime courts. And they want to be sure when the arrest is done that it's going to stick. And that can mean there's massive delays in cases, which, you know, unfortunately gives people chances to run and do all sorts of things with assets. So you've got to be really on top of these things. And unfortunately, you pretty much need to use a private company. And there are many good ones out there, but you need to use a private company to drive this process for you if you want it to go anywhere. And does that answer that question, Megan?
Yes,
I think it kind of gives you an idea.
Megan, we've just got a comment from Shoulder the Sea saying, where a small business transitions to employing staff outside, they do not spend the time and resources on risk management and mitigation and get bitten. My comment to that was that's why we, as I2, have made it possible to assist the insured to review their risk by way of assessment. Maybe you can just give some input on these assessments in aiding the client to mitigate their business and the risks they face in their business.
Absolutely. So thanks for that question. And I think it's incredibly important for us, first and foremost, what's really necessary and what's changing the landscape and moving everybody from purely just buying the insurance, which, as you know, is particularly expensive, moving away from that into the risk management landscape is the necessity and the cost associated with it. With a small business, particularly if you are outsourcing as well, a lot of these functions that you might have concern over, it's important for us also to have a look at those contracts and those agreements, and particularly the liability that flows between a smaller business and their service providers. So if they have those sort of back-to-back arrangements, they've made sure that the right contracts are in place so that indemnifications and the liability is all taken care of within their contracts, then that should take care of just their ability really, first and foremost, to recover should there be any discrepancies with their service providers. But of course, that's after the fact, once the problem's already occurred. So I think it's really important for people to be careful of outsourcing certain functions and just thinking, well, that's not my problem anymore, because it certainly will be a problem when somebody's stolen your money. So it's really important also to be very connected with the service providers, understand their frameworks, whether it's necessary, and Michael can maybe comment on when you go into a particular client who has a lot of outsourcing, that the assessment is taken into the outsource and service providers as well. You can't just have a look at your own internal controls and think everything else outsourced is not an issue. So it's important for the ownership to take place even where there is outsourcing and service providers involved. Mike, I don't know if you wanted to add a bit there.
Yeah, I do want to add a bit to that, because we've seen it's always been a factor, when people use labor brokers. It's a major problem because, especially with drivers in big logistics environments, it's how do you ensure that the people that you're employing don't have criminal records? I know I mentioned it earlier, but we had a case some years ago where the company employed about 100 drivers, and they had multiple thefts and syndicates and all sorts of things operating. And we discovered quite quickly that, probably 20% of those drivers had criminal records, some for murder, some for theft, some for whatever. The whole list was there. And the problem with outsourcing is that you have less control over the quality of the staff members. So what will happen is the business will enter into a performance level agreement with that outsourced company, because it's all about performance, providing blue collar workers or drivers or whatever it may be. They just want the job done. They don't ask the questions that they need to ask to ensure the safety of their own businesses. And this is a fundamental problem. And you can't do that. It's just, you're asking for trouble. You need to clarify, and same thing as I said to you with security companies, clarify that they've got a security officer's liability policy in place, and understand the type of quality of staff that you want to be doing your work, even in a part-time environment. The last thing you want is to be running a 24-hour operation with a whole lot of staff that you don't know and that have never been vetted properly. And ultimately, you're going to end up with a liability claim against that company, or a civil argument about who's at fault. So it's a vital issue, and it's a good one to raise. Absolutely.
So, Mike, I think if I think about I suppose these things that we hear from clients often, one of them, particularly around theft of money, whether it's an internal or a misappropriation of sorts, is that I don't need to worry about money being stolen from my bank account because the bank verifies that that account exists. I think it's important to debunk this myth that all banks check the bank account that's put in, and that they're verified against the person that is on, because I think it's a risk for any type of organization who's making payments, or even receiving or expecting receipt of payments, is the potential for interception of those, change of banking details, whatever it might be. Maybe you can just touch on that.
It's a great question. It's one of my big bugbears, and it's something we still deal with today despite technology, is that effectively it's safer to write a check than it is to make an internet transfer. And some banks are better than others, and I won't name them, but effectively you can still make payments into bank accounts that is in somebody else's name. And I'll just explain what I mean by that. Is, let's say you want to pay Coca-Cola 500 Rand, and your credits clerk goes and pays 500 Rand to Coca-Cola. The bank does not necessarily pick up the name of the account holder to the account number. And this is a misnomer. And the service is available to a certain extent. It's a basic check the banks do, and they're getting better and better at it, but we're still seeing it as a major issue. And I say to you again, remember those old days, some of you, I think I'm getting too old for this now, but the old days we used to write a check, and it used to say on there Coke. And if Coke was spelled wrong, it wouldn't accept it. But it's not the same with internet banking. So internet banking, you've got to be absolutely vital that you are doing bank verifications. And, you know, if you don't think you've got bank verifications, raise it with your bank, find out, and then look for another source to do a verification if you have to. There are companies that do this bank verification.
I think, Mike, if I can just jump in there,
Sure.
without going into too much of the underwriting, is what I2 has done over the last 24 months is correct the underwriting approach. And one of the simple things we've added to our policy is a dual authority condition or dual verification condition that's on the policy of all commercial crime insureds. And it goes as far as saying that not one person can be any responsible for verification, or it needs to be double checked. If there is going to be that one person checking it, they need to physically pick up the phone, make a phone call and say, we received this request for payment. Is it you? Is it not? So that they're not just relying on an email that's come in their inbox, assuming it's from the MD of a company. And then when they go look at that email address, it's actually come from a Yahoo address and not from the MD of the company.
So this is another great question because it's very topical and it's in trend, is that we're seeing a lot of fraud with change of bank account details. And there's a reason why dual authority is required. And it's not just to make a payment. It's companies phoning in and saying to a creditors clerk, please change my bank account details. And, you know, you can sound like a broken record and keep telling staff not to just act on that, but you need proper policies in place where you've got a dual authority where management have control over that. There's too much fraud in change of bank account details to ignore that risk. So anybody who wants to change a bank account detail, this needs to be handled only at management level. It doesn't happen often. So even if you've got a large book of creditors, it's not often that you're going to find, you know, a change of bank account. It's not difficult for a manager to be involved in that process. And you do need to check that that is a real document, you know, that hasn't been created and spoofed to, you know, spoofing is where they change the name on the top of the email. So that looks like it's coming from the company when in fact it's not. But just moving back to the whole topic of today and giving you just a quick overview again, and then I want to just get a bit of feedback from I2 and the seriousness with which they take these this risk management exercise. So, and I just want to go through the process quickly again. You know, ultimately what happens is Crime Risk Advisory are asked to conduct a risk management exercise at Joe Bloggs' company. And, you know, it may be because they're looking at insuring the company. It may be because they're renewing it. It may be because they just want to have a look at the company. I2 pay for that. And they pay for me to phone the company, make contact with the right people, obviously going through you guys. I mean, you're vital in the whole, you know, the chain. I mean, you guys are the ones that call the shots ultimately. But it's to add value to your client so that your client has got a specialist coming in or one of our team going in there, looking at the business, looking at those holes, discussing those loopholes with the business, finding the solutions. And as I said before, in a cost-effective, sensible way. Discussing it with them first before going back to the insurer and saying, guys, we've agreed that this is kind of what they need to look at going forward. The insurer then takes it further. And then right now, I'd like to pass this on to Megan to give you an overview of the seriousness that they take the findings of the risk management exercise.
Thanks, Mark. So I think it's incredibly important for us to make this very clear that our intention is all about adding value to the client. It's all about getting involved at the risk management level with the client, rather than being in a position to dictate terms and conditions. We really want to be able to take the expertise, take the resources that we have available and put it into preempting these kinds of risks and preempting what can go wrong. And so from our perspective, once Mike has done their assessments and his teams have been through the client, have chatted to those concerned, they certainly do have some really interesting interactions with the clients around what is possible for solutions, and particularly discussing those and making sure that they are appropriate. Once we receive our feedback and assessment reports back, we then take it through not only our risk management process, but also through our underwriting and our claims. And we have a full look at that business, what has happened, what has been found, what is happening at grassroots. We then add anything from an underwriting perspective we may find of interest to the client that would help him. We may find things from claim scenarios that we have learned that we can add. And we compile a risk improvement report. And this complete report is then sent off to you, the broker, and shared with your client as well. So you as broker have record of it. You are also adding value to your client because you're able to actually help them with so much more than just placing insurances, but the alternatives to managing their risks. And we're able to put that together. Certainly, there are going to be times when our underwriting team need to have a better look at a client, a better understanding than what you can just get from a proposal form. There's only so many questions you can put onto a form. And so it becomes important for us to have a look at what's practically happening for the client. And so if there is a particularly high risk industry we're concerned about, but we're really trying to assist you in placing cover, we may ask for an assessment then as well. And so there will be some times when these assessments come in hand with underwriting to support the underwriting. And ultimately, I think the more information underwriters can get, the better. And equally for yourselves as brokers to truly understand the client, understand what's happening within their offices, within their departments, so that you can also offer better solution. I think a couple of things that have been raised today cross over into cyber liability even. You know, we're not just talking about commercial crime. There's often the way in which these commercial crimes are happening can overlap into cyber crimes as well. So it's incredibly important for us to look at that, and Michael would certainly raise any cyber concerns as well for us that we can then take, and we have risk management solutions on that as well. There was a question that popped up and then went away. Did you see it there? Let me see quickly.
Yes, so I've got a question from Nadia Shiva, who's in our claims department.
Yes.
And she has said, from what we've noticed, is that the process with some of the banks in trying to get funds recovered or accounts frozen when payments are made into fraudulent accounts is incredibly slow. And at the end of the day, the payee stands to lose. Is there anything that this go slow approach of some of the banks can be tackled? Is it worth challenging a big organization like a bank over their processes?
So I think certainly, and I know Mike will have an opinion on this as well, but I think certainly from our perspective is people need to be very careful of going, well, the banks are constantly troubling you as a personal bank account holder for FICA, RICA, whichever one it is, and all sorts of other things. So your expectation is that how is it possible for a fraudulent bank account to be opened? And how can they not trace it when you have so much information you have to provide? But unfortunately, it is happening, and you certainly don't want to be caught off guard and victim and left to your own devices to resolve these issues when the banks are not responding appropriately. So they certainly are, and we will have another session later on in the year talking specifically about bank verification, and it's another risk management tool that I2 are working on to be able to offer that verification from a third-party perspective, so that you can actually ensure that the payments you're making are being made to the correct party, and avoid the fraud altogether, because it certainly is a headache ever trying to get that money back, and going through the system often is just a huge waste. So I don't know if you want to add anything to that.
Well, I can add to that. So, I mean, at the end of the day, opening fraudulent accounts, it's still a nightmare. And, you know, it's amazing. I don't know how many of you have opened an account lately, but how difficult it is to do it. And yet we see so many instances where accounts are being used. And unfortunately, people are also gullible. So what happens is, you know, somebody goes and opens an account, and we see this, unfortunately, and I'm going to name them, we see a lot of accounts at Capitec. And then some criminal goes up to a person with an account at Capitec and says, can I use your account? And we see this time and time again. And I suppose at the end of the day, the bank can only do so much. And there are different types of accounts. And I know there's informal accounts. And you know, someone's mentioning FICA. Guys, I'm not seeing the FICA teeth. I'm not seeing them putting their teeth down. And it's becoming an issue. And I can see that people are going to end up challenging the banks on FICA, especially when there's non-compliance. But we've seen it in gambling. We've seen it in other areas. You know, businesses are sales driven. They want as many accounts opened as possible. They want as many MVG cards out there as possible. So they're going to act dumb. You know, that's the reality of it. And it's just a common occurring problem that we are still dealing with. And unfortunately, even in some of the other banks, we're still seeing a lot of fraudulent accounts being opened. And it's a constant problem for the banks. And they also are trying to address it. This is not just sitting on our side of the fence as investigators and people looking at the other side of it. They're aware of this problem and they're trying to do something about it.
Charles, thank you. I see your question. I'm not going to go into the knee-deep of commercial crime and what it covers, but you have asked for very high level oversight of what our commercial crime policy covers. So the intention of our commercial crime policy defined event is to cover any fraud, theft or dishonesty committed by an employee against the insured with the intention to cause the insured a direct financial loss. I'm happy to do a more one-on-one session with the brokers who are wanting a commercial crime 101. And yeah, please get in touch with me with that regard. And I'm happy to do that at your brokerage.
Thanks.
Were there any other questions? I just want to go through and just make sure we've touched on anything. If we've missed anybody, because there's been lots of comments, please, you're welcome to unmute yourself at this stage.
Yes.
Yes.
I can just dive in. Billy has said, Mike, if you could leave the audience or brokers with 3 to 5 points, what would it be? And that is our claims expert, Billy Young's cover expert.
Thanks, Billy, so much for that. I think the most important thing from a broking perspective and seeing from a loss, I see the losses, is that you must understand your client and you must understand what your client's needs are. Be very careful with that sum insured, because we've seen losses far in excess of the sum insured that companies are choosing to have. I had one construction company not that long ago that had they perceived to be a bad risk. They had a sum insured, I think, of $1 million, and they had a loss of 11 million. So understand your client, understand their needs, make sure your sum insured is correct. If you're not sure, ask the underwriters to assist you, because they are experts in this. This is what they do for a living. So you need to fill out those forms properly, make sure you're giving the proper information so they can assess your risk and advise you as to what to do. Sometimes cheapest is not always best. I think if you can really use this risk management tool as well, I can go on Billy, a lot because I want to swing it my way. But risk management is absolutely crucial, and it means you're going to get cheaper premiums at the end of the day. So guys, I think just pay attention to your clients and phone the underwriters and use them for what they're employed to do.
Right, I think we have 2 more questions, and the one is from Jolie Knowles. Apologies if I pronounced your name incorrectly. It's, does a bank have the right to recover the costs from a supplier where credit cards have been cloned, even if it is over a 3-month period?
So I'll be quite frank, I'm not an expert in credit cards, but my understanding is that it's a month. And as saying I'm not an expert, I'd rather just leave it there because I can't fully answer that question appropriately.
Thank you, Mike. And that's why we love I2, because we're always upfront and honest. And if there are other questions we're not comfortable answering, we'll always seek further experts to help us answer those questions. Then there's Maxine Board has made a comment around the integrity of internal staff being paramount. Can we demand debt reviews from our staff that may prevent a future loss, or are we contravening POPI?
Okay, so that brings into play the lifestyle audit. Because it's a very good question, because at the end of the day, what you're doing is you're doing a credit check, for example, from one of the credit providers, and you're doing a criminal record check. That doesn't mean that in a year's time, that person is not a murderer and a bankrupt. You know what I mean? So the question is excellent. Lifestyle audits are there to pick up those type of things at the appropriate time with high risk staff. And you've got to agree who your high risk staff are. It might be your financial manager, your procurement staff are considered high risk staff. And there you want to understand where they are at any one time. Everything is done for example, Crime Risk Advisory does do lifestyle audits, but it's all POPI compliant, and it has to be POPI compliant. The staff members are aware of it, it's done with their permission, and it's done in a certain manner, very professional manner. And, you know, it's something that companies need to start raising on employment. Right? So HR need to have these conversations with the staff members when they employ them, because obviously it's harder to bring it in later when someone's been working in a situation for 5 years. But the company is entitled to do it as long as it's properly compliant.
Thank you, Mike. I think that covers it very well.
Great stuff. Thank you, everybody. We've got about 3 minutes left. If there's anything else anybody has questions, you're welcome to, I think, unmute yourself at this stage and throw that question out there. Otherwise, we're going to wrap it up and say thank you so much to Michael for joining us from Crime Risk Advisory. Thank you to Giselle from Underwriting, and thank you so much for joining us. Somebody said in here it's a scary topic. It absolutely is. But our aim really is to add value, is to find really collaborative solutions with the client, because we can't just keep paying premiums. At some point, we've got to start behaving better and changing behaviors. And so if we can help in any way and support you and your clients in becoming better risks, that's the aim of the game. So thank you so much, everybody, for joining us. Have a super Tuesday, and we'll see